Hi there, this is Kishore Mohan and welcome to my YouTube channel. So, today's category will be on wealth and today's topic will be on the why the stock market sank today and the causes and effects of the sinking and a brief explanation on interest rate and inflation, how it is interlinked. Let's get into the video. Before going to the reasons behind why the stock market sank today and the causes and effects, I'll give a brief update about the Nifty levels and the US market index levels. So, the market today opened on a negative sentiment both in India and yesterday in US market also. The whole global market is negative sentiment. Today, the Nifty 50 opened around 15,900 levels and went down till 15,800 levels, and compared to previous weeks this is almost 500 points down. So it's a very negative sentiment and it's almost in the hands of bear grip, I would say. So also US markets, the Dow Jones was almost 1100 points lower, the Nasdaq, S&P 500 all went down. It's a huge global fear going on. So now I talk about the cause and effects of why the market sank and explanation of inflation and interest rates. Now there's a huge global breakdown and the US market, Indian market, UK, Russia, all market is going down. So what can be the main reason behind it? Why is this a huge negative sentiment going on? And how is it connected to inflation and interest rates? Now, the main reason is inflation. So, what is inflation and how it causes global market to go down? Let's get into it. Now, there's a huge global panic and a huge negative sentiment going around the globe. It can be US market, Indian market, UK, everywhere. It's a huge negative sentiment going on. There are many reasons for this. The first one being is that inflation. Inflation. What is inflation? Inflation is basically an increase in the price of goods and services and a fall in purchasing power of the money. Well, see, inflation is a gradual process, but the problem is caused when the inflation rate goes high. This brings a fear in economic wise. Like, imagine the petrol you used to buy for 90 rupees in India 2 years back, now it's almost 110. There's a pressure, right? There's a huge pressure in economy. So this is what inflation is: the increase in the price of commodities, goods, and the purchasing value of the money goes down. That's inflation. Now, after the financial year ended, as the previous March, we are getting the interest rates. What is the inflation rate of every country? So, US market. I'll tell you why the US market sank yesterday hugely and why Indian market is falling is because the inflation rate hit almost 8.5% in US, and in India it's almost 7.77% approximately. This is a huge number. What are the factors contributing to inflation rate? So there are many reasons again. One is the Ukraine and Russia war, where there's a high demand in oil, crude oil prices, petrol is increasing, rates of diesel is increasing, all crude oil, even edible oil is imported from Russia. So a lot of factors contributing from the war, and there's an economic breakdown in Sri Lanka, Turkey, Afghanistan. All these are contributing to rising prices of the commodities. Also, the pandemic recovery was not as good as expected. People didn't recover yet. The companies hadn't recovered at a good pace. So this is also contributing to inflation. Then we have the transportation cost, because the crude oil price have gone up so much. The transportation cost also has increased excessively, which again contributes to goods and services. Thus, inflation being at its peak. Now that's a big concern globally. Now, what happens when inflation hits high? I told you, right, the effect of the cost. So the effect is that government or the Federal Reserve or Reserve Bank of India will increase the interest rate. So this increase in interest rate puts stock market in risk and stock market goes down. Now I'll explain you what is interest rate and how it contributes to a fall in global stock market. So whenever there's an increase in inflation, the Federal Reserve increases the interest rate to contain the inflation. So what is interest rate? Interest rate is basically the rate of return the lenders demand for the ability to borrow their money, I'll repeat again. The rate of return the lenders demand for the ability to borrow their money, that is interest rate. So why do they increase the interest rate? See, when there's inflation, that means there's a lot of money pumped up into a system, that is a society. So basically, you have a lot of money, people buy many goods and services, thus there's a demand for services and goods. So what does the company do? They increase their prices. That's how price keeps on going up. So to control this, we have to suck the money out of the system. So when you increase the interest rate, uh, people do not tend to borrow money. So I do example. Suppose if you have cash and you want to buy a car. So you tend to take a loan or borrow money from someone. What if the interest rate is more? What if you have to pay more interest? You would better keep it in savings instead of buying a car. So the money is not pumped into the system. The money is taken out of the system. Basically, the demand is decreased now. And if you are a borrower and if interest rate is more, imagine the company borrowing money from a huge big bank. Interest rates are more. They won't contribute to building a new business or something. Thus, the cost of debt is high. It discourages people from borrowing and slows down demand. That's why interest rate is increased when there's a high inflation. Now, once interest rate is increased, people think saving money is much better than putting into the weak economy or stock market, where companies do not have enough fund to make a new business or contribute to a new product because there is no demand. So the inflation will be in check. That is, the price won't go up because there is no demand. That is why when inflation goes up, interest rate goes up, and thus people who has interest in stock market, they don't invest in stock market, and who are in single interest already invested, if they are in good profit, they move out, especially foreign institution investors in India. That is why foreign investors are going out of India, because the interest rates are more, and they better to keep in savings or invest in bonds instead of putting in stock market and taking a huge risk. Thus, the inflation and interest rates are connected proportionally, or it increases proportionally, and the stock market goes down. These are the causes and the effects of inflation, interest rate, and how why the stock market is going down. So, what an investor must do? Well, see it out, wait for it, be patient. When as and when the market corrects, buy slowly. Do not go once in on. Okay. Have a great day. Thank you. Take care.